Hey, and welcome to Payments Cannot Fail. I'm your host, Mark Fieldhouse from Form 3. It is really exciting to have Dave Scola, our Chief Product Officer, join us today. Welcome, Dave. So I think, one of the things that you and I often talk about, and we have the pleasure of taking many trips together and conversing, with US payment rails now live, particularly in the instant space, the whole consumer experience has changed, of course, and expectations have changed. When it comes to creating amazing products and product experience for consumers, we're going to be discussing a little bit today about how that's changed and how, as a chief product officer, you have to accommodate a lot more, let's call it wider attributes now that customers are expecting. And certainly at Form 3, we spend a lot of time focusing on not just our immediate customer, but our customer's customer. Yeah. So as we go through this sort of discussion, we'll pick into a few of those details, what it takes to build great products, and how really we accommodate that vastness of financial services and fintechs, not just in the US, but in UK and Europe as well.
Absolutely.
So let's start by zooming out a little bit. So as the UK and Europe obviously moved a long time ago in real-time payments, the US has taken, let's call it a more demand-led path. So they created FedNow and real-time payments with the clearinghouse. That transaction limit's just gone up, I think, to
10 million.
10 million. And when you piece those two things together, what I want to explore is how that's impacted maturity and adoption. So if we can start there, because you've observed it for the last 4 years within Form 3. So what have you experienced, Dave?
Yeah, I mean, certainly within Form 3, but over, almost approaching 30 years across my career. And it is changing in the US, but it's still a long way from where it's the levels of maturity that have been achieved in Europe and the UK. I mean, in the UK, I think we're coming up on 15 years of faster payments, somewhere around that. RTP was rolled out in the US 6 or 7, don't quote me on that, years ago. But the levels of adoption we've seen have been nowhere near what has happened in the UK and in Europe. And that's partially because it has been very much left to a demand-led approach in the US. The US government has not, and I will go on record as saying will never mandate any bank adopting real-time payments as a prerequisite. Just not the way the market works. So instead, you're left with banks to develop use cases for their clients, or in a lot of cases, we're seeing fintechs driving the banks to adopt new use cases because their clients, they're trying to differentiate themselves from the competition.
So what happens when it's widespread across the US? And let's call it, what happens when it becomes behavior as normal then, that people are using real-time or instant payments?
It's going to be interesting to see. I think you're starting to already see things like, I'll give you one use case example, car buying, right? Most people buy their cars on the weekends, right? Banks are closed on the weekends, obviously, so you have this still very archaic approach where people are kind of posting checks and the dealers are hoping they clear, and and with RTP now reaching levels or higher limit levels, it's making things like not just car buying but closing on a house possible, right, in ways that would have previously been reliant on somebody taking a credit risk or having to rely on a FedWire process that's very expensive. So I think we're starting to see those types of use cases play through, and then as they become more broadly adopted, you'll start to see other things follow through. I think one of the big ones we're waiting for is government mandate of, I just said they won't mandate anything, but I think they will mandate the use of FedNow in particular for things like tax returns, right? So, which will be a big, now if I can get my tax return instantly because my bank is live on FedNow, but you can't because your bank is not, right? That's going to start to drive some. So
it becomes competitive.
There's a competitive angle.
So what happens when it becomes, if we call it a feature at the moment that people ask for, so they come to us or another company and say they want real-time or instant payments. What happens when it becomes a table stake or a must-have that a bank or a fintech must offer that to customers? Is there a shift in their thinking to get to that point?
There is. I mean, the facilitation of the instant payment is technical, and we certainly help our clients achieve that technical compliance. But there's also a host of downstream requirements, and the big one being liquidity management, that also will drive banks to look at changing the ways they do things, right? So if, going back to my car buying example, somebody wants to buy a car, banks need to facilitate that credit extension, right? Or do at least the funds availability check on the weekends. The RTP account needs to be funded in advance, right? The banks need to have that liquidity available, right? So that's one example of how they're going to have to start to change the ancillary processes around the payment to accommodate it.
And when you look at the limit that's just been increased, I don't know how recently that was.
I think it's in the last 6 months or so, yeah.
Yeah, so $10 million, right?
Yeah.
So what's that, 9 million?
It's $10 million.
Yeah.
We don't need to convert it.
Yeah. What does that mean in terms of use cases? So can people do things differently? Is it different for banks versus fintech? How do you think that landscape
Yeah,
changes?
I mean, look, it's 10 million at the scheme level. It's within the banks or the fintech's purview to set a much lower limit, and most are. But I think it does start to become a credible solution, again, and not to raise the home buying experience again, but for things like buying a home. And it also becomes more of a potential channel for B2B transactions as well, right? So somebody is receiving inventory over the weekend. The supplier expects to get paid instantly for that inventory. Having a $10 million limit allows for, large scale transactions for things of that nature, right?
Got it. I noted a few use cases or examples, I think, that I found myself, but it'd be interesting to explore others. So I put things like quick refunds for people, the gig economy, I guess, people who want to be paid immediately if they repair your roof or your garage. Payroll, I think, is probably something in the US that they're used to doing through batch and ACH, I guess. If you think about how it's going to change a customer or B2B, do you think it's going to change buying behavior potentially in the retail sector?
That's interesting. I mean, potentially, yeah. I think we're seeing some of the use cases evolve around buying behavior already. So I'll give you an example. One of the big use cases at the moment is for gambling, right? Like gambling is always kind of cutting edge in the payment space for whatever reason, but you're seeing people are more likely to gamble more if they can be assured of instant withdrawal of their winnings, right? So that's one of the big use cases that we've seen, and it drives a behavior. I won't say if it's good or bad, but it drives a change of behavior in that regard. Right. And I think it's also the gig economy aspects, right? So the remittance of payment immediately for a service rendered is also, I think, becoming more and more expected for some gig economy workers. And so, it also, which certainly has positive aspects for those people who are tend to need the funds more immediately to buy things, right? So it has positive repercussions in that regard.
So we're going to move on and explore a little bit about some of the interoperability between the Fed and the clearinghouse, because it's something that in the UK and Europe, certainly, we don't have some of that, let's call it partnership, not conflict. But as a chief product officer, so you are designing the strategy, the future of how these products evolve, Dave. What does real-time or instant do to how you have to think about the products you and we design and then sell to our customers? Because there are very different levels of expectation on service, on throughput, those types of things. Can you just add a few comments now and then we'll explore it?
Yeah, I think the example you raise of FedNow and RTP not being interoperable is a good one, right? Because that does create issues in that certain receivers or certain payees are only addressable via one and not both, right? So you're left with, if you're a bank and you're trying to identify how to remit that payment to the end beneficiary, you need to determine how that beneficiary is accessible. And you also need to be able to accommodate that on the front end in terms of how you receive the payment. So one of the things we've been able to do in working with our clients is we have a single API architecture. That API accommodates for both RTP and FedNow. So once it hits our platform, it gives us the flexibility to orchestrate between one or the other, depending on where that payment ultimately needs to go.
Yeah, and in episode 1, actually, we had Mike, our CEO and co-founder, on. We were talking about how creating a platform for real-time and instant payments has expectations, not just for the customers that we serve, but their customer. And certainly in many of my conversations with the banks and fintechs, we try to divert our attention and focus onto what serves their customers better. Yeah. Can you just, obviously we're going to cover reliability and scale in a future podcast actually with our CTO. What does it mean to make a great product now for real time? Because that's very different demands from something that's batch or you can do offline, right?
Yeah, so I think now is the operative word. You can't build for now, right? It is architecting in order to accommodate the future. So we have a view, particularly in the U.S., that banks are increasingly going to want to be what we call omnichannel, because their clients are expecting that. So just to give you an example of what the customer experience is in the U.S. now, you will log on to your bank and you say, okay, I want to make a payment, and your bank will present to you, okay, would you like to send that via ACH, or would you like to send that via RTP, or would you like to send it via FedWire? And for the average customer, they're not.
They don't know.
They don't. They don't care how it's going out. They're looking to achieve an outcome, right? I want to pay it instantly, or I want to do it as cheaply as possible, or I want to do it as irrevocably as possible, right? So we are architecting to allow for that, right? So not only the ability to take in a payment via a single channel in, but then to take that payment and route it out via a multitude of channels, whether it is the existing channels today, but also to accommodate for things like stablecoin and other end channels that may evolve over time.
Yeah, it's funny because I read something recently, and I've put something down here that I must talk to you about actually, which was, should an end customer actually care, right? So if I don't know, you or I making a payment to a relative, if we just dictate in the mobile app or the web interface that we want it to be there by Thursday, or the app comes back and says, that will cost you, I don't know, $2 or £2 to send that payment. Would you like to do it for half the price and take longer? Do you think we'll ever get to that sort of arbitrage point where...
I do. I think that, and we're already seeing it in the fintech space, right? They're architecting for an outcome, not for a methodology, right? So I think Mike our CEO likes to say, nobody ever wakes up and says, I want to make a payment today, right? Like a payment is an outcome of something else that you're trying to achieve. And I think it's building in that flexibility so that it is natural logic going into the experience to say, this is what I'm trying to achieve, and therefore allowing our clients to present to their clients, here's the different options you have, and we can accommodate any of them, but we can gear it towards the outcome that you're trying to achieve, not what happens to be the corridor or the rail or the methodology that we would typically use for that, right? So.
Yeah, and I think, when I was thinking about, as you always do, the title for these sort of discussions, it was very much centered around how do you design a great product in this instant payment era. Now, although it's probably not a very subconscious thing we go through yet, how do your heads of product think about designing great products when it is instant? Is there a process they go through? Is there a methodology?
Yeah, I think one of the benefits we have at Form 3 is we're already serving multiple markets, and those markets are at different levels of maturity already, so we can leverage that experience. And it's been particularly helpful as we build out the U.S. product offering to have experience in the U.K. and Europe. And as we look to other markets that are, not to get too technical, are all being built around an ISO 20022 data structure, right? It's going to allow us to more rapidly evolve into those markets. So I think the experience of what other markets have done at different points of the maturity curve, but I think also, look, our product managers are some of the geekiest payment geeks in the world, and I say that with great affection. And they're staying on top of market dynamics, right? They're monitoring not only regulatory change, but what's being discussed at the conferences, and we're engaged with our clients every day, right? So we have so many points of feedback that help us iterate on our product offering.
Mike and I covered that to some extent, actually, where we perform this layer of abstraction from complexity for our customers, because we don't feel that the cadence and frequency of change that the schemes and the rails impose on banks should be felt by the bank. So,
exactly.
A key value we bring is to separate that complexity. I think, as we've seen real time in the US picking up, particularly, I know you and I just last week in New York were talking about the momentum and the pace just seems dramatically different this year. You mentioned ISO 20022.
Yeah.
Do you think that's had some impact now that people have finished the first wave of that now?
Undoubtedly. So I think it's two things, right? There was a significant uplift that a lot of banks had to go through to get their technology compliant with ISO 20022. And in layman's terms, what ISO 20022 does is just open up the data set much more broadly to allow for much more information to be transmitted with the payment. Getting to that point is quite painful, but what that then unlocks is huge, right? So
other innovation, I guess.
The innovation you can build on top of that. So I think what we're seeing in the U.S. and why it feels so like there's so much momentum at the moment in the U.S. is people are over that regulatory piece and the compliance piece, and are now looking to try and take advantage of the opportunity that the new technology creates, and it's been great, right? I mean, we are seeing tons of interest. Finally,
huge acceleration.
Yeah.
So when a bank, so obviously the market's accelerating. We think that the ISO changes have allowed people some breathing space now to focus on adoption. We hope, of course, of instant payments.
Yeah.
Let's talk about risk for a second and execution risk. I read some recent articles that were talking about banks would have adopted far sooner, potentially in the US, if there wasn't such a big estate that they had to think about. It's almost like riding the bike, trying to change the wheels, the chain, and everything at the same time. Do you think something's changed in that now? It references here that fintechs can move much quicker because they don't have that technical debt that the big banks, the tier ones, the tier twos are experiencing or working with. What goes through a bank's decision process, do you think, when they want to modernize? Is it all risk, or is it?
No, I think it's risk, but it's also that technical debt issue, right? Like, I always like to say, the space in which we operate, there is no proprietary advantage for a bank to build for themselves, right? That they, for a bank to go to market and say we have the best connection to the Fed or the clearinghouse,
the consumer just doesn't.
The consumer doesn't care, right? So, I think. Focus only on what makes your beer taste better or something like that, right? Like, the banks should free up capital to focus on that user experience, not on what we do, which is just that conformance layer. And I think our ability to, as you correctly said, abstract that, help the banks abstract from that complexity of integration with the central infrastructure, allows them to do exactly that, because we have presented the same face to our clients for the last 10 years, right? It's the same API. As long as they maintain conformance with that, they can do whatever they need to do on the front end to meet their clients' demands. And I think things like 20022, the reason why it was so painful and took so long and so much investment on the part of the banks is because each of them had a proprietary approach to how they integrated with the
So they've almost got to backtrack a bit, I guess, before they can even step forward. They've got to undo and then...
And there's a lot of untying of data
of
models and untying of architecture to get to that point. But once, and I'm not minimizing at all the lift that's required to get there. But I think banks are starting to recognize they need to make that investment in creating that abstraction so they can innovate in the future. And
do you think banks, do you think they want to be a fintech, or do you think they want to take the attributes, or do you think it's a combination? Because you hear a lot of, we're going to be a fintech, or we're spinning up a fintech by the big guys, let's call them that. Do you think that's just an aspiration, or do you think there's an element of reality to that?
I think that, again, having been in this industry for a long time, we went through this phase where fintechs were seen as the opposition, right? As the competition. I think that's changed dramatically, right? I think the banks are seeing they can use fintechs, depending on what their business model is, right? They can use fintechs to achieve different ends depending on how they want to deploy them, right? And what you're seeing, in particular in the payment space, is fintechs are providing a mechanism to consolidate massive amounts of payment activity through a single funnel in many respects. So I think most banks are now trying to figure out how best to work with fintechs rather than continuing to take kind of an antagonistic approach.
Closer,
yeah, keep it close. And I think, there are things that fintechs do great, right, in terms of iterating on product and presenting new solutions to clients, but there are things that banks do much better as well, like consolidating capital, right, and providing advisory services on capital markets transactions, right? Those are things that, and I think there are banks that can play in both spaces, but not many, frankly, and picking a lane and working with the appropriate fintech partners to
specialize in what you do best.
Exactly. Yeah.
So I'm going to ask you to take your crystal ball out, and we're going to look ahead 3 to 5 years, and we'll focus at the moment on the US, where we've centered a lot of this discussion because real-time payments and instant is becoming far more prevalent.
Yeah.
What do you think the industry looks like in, let's go 3 years to start with, and then we'll move to 5. Complete adoption, part adoption? Obviously,
in the US specifically? I don't think it will be, I think it will be close to complete adoption in terms of banks that are enabled to receive payments. I think send, and I know for the uninitiated, it sounds counterintuitive. Why would you pick to receive and not send? But there's far more risk on the sending piece from the banks and liquidity management and complexity on sending a payment than there is in just receiving it. Yeah, so I think we'll achieve near ubiquity on the receive side. The risk is that send is consolidated down to a very small population of banks. I think we're already seeing our way past that through broader adoption. But then I think it just becomes, as I say, I think the future is the omnichannel approach that I was talking about before, where instant payments just become one of several mechanisms to achieve an end.
So they just become ubiquitous and sort of melded into. So what does that look like on a European and even global landscape? Because many regions have been quicker to accelerate in instant payments, of course, if you look at India and the Middle East. How do you think that impacts the US and how much they might push real-time payments to be competitive? Or is it a competitive
It will be competitive. I think so. You could talk. We could do an entire set of podcasts on this topic, but I think a lot of it has to do with how embedded card payments are or card transactions are in the U.S. versus where you've seen massive uptake in real-time payments in other markets, and Brazil and India are always held out as the shining examples. It's because they didn't have an embedded card mentality, I guess, in the economy, right? So you were competing with cash, and I do think that's where even in the U.S. it's going to be cash and check that are first cannibalized before it gets into kind of card payments.
Got it. So you're changing an entire ecosystem. Really,
You
aren't
are,
you?
yeah.
Look, I've really enjoyed the conversation so far. I'm going to pick on something that I really want to sort of rewind on.
Sure.
We've spoken about instant payments becoming fairly ubiquitous in every country, every region, and in the US they're picking up momentum now and pace. What do you think a redefined product platform solution looks like in that instant payment space? Does it look completely different from where we are today? And how would Form 3 be positioned to capitalize on that?
So I think what we are doing now is, if you think about the way we interact with our clients, they are all using the same API standard to interact with us. We have already demonstrated our ability to use that standard to facilitate interactions between banks, right? So we just published the outcome of this proof of concept that we did with Pay.UK that demonstrated our ability to move value from one participant to another using
direct bank to bank.
Direct bank to bank, right? That starts to open up some very interesting possibilities in the future of how we can work with banks to move value, whether that be stable coin or digital value or fiat currencies as it exists today. Not only between banks, but I think increasingly you're going to start to see demand for the real-time exchange of value between countries, right? So there has been several examples of attempts to use cross-border real-time. I think that is an inevitability, right? That the market will move to cross-border real-time. How we can help facilitate, I have some ideas, and I think that there's some exciting opportunities to iterate on the technology that we've already developed.
Well, we'll save those
We'll
actually
save
for,
that for later. Yeah.
a future podcast. Look, Dave, as always, it's great to talk to you. I know we
I
spend
really
a lot of our
appreciate the
time
time.
together. This has been Payments Can't Fail, and discussing how you design incredible products for the instant era. So Dave, thank you again.
Thank you so much, Mark. I appreciate it. It was a good time.